So MSTY will be announcing their distributions tomorrow. They will be going X on Thursday and pay out on Friday. So the big question is it better to buy before X date or on the X date? We'll check it out. Hello, my friends, this is Legend. So MSTY will be announcing their distributions tomorrow. And the big question is always, when do you buy it? When's the best time to buy it? Well, that is a decision that you have to make. But I can tell you some of the things that I look for and why I think buying on X date is the better of the two. So let's just slide over to the chart and see a better representation of what I'm talking about. All right, so here we are on the trading chart here, and I've got MSTY pulled up. And as you can see, just to give a recap of MSTY, it is at $24.70 today at close. We did pull back a little bit, but ended up pretty much closing flat with 5 cents up for the day. So is it better to buy on X date or before X date? And some of the reasons why you would take that into consideration is if you buy before the X date. So if you own the shares tomorrow, Wednesday, before the market closes, then you will be eligible for that distribution because you must own those shares before the X date. And the X date is Thursday. So by owning those shares on Wednesday, you will be eligible for that distribution that would be paid out on Friday. But if you wait until Thursday to purchase those shares, then you will not be eligible for that distribution that gets paid out this Friday. And the reason being is because you must own those shares before the X date. So therefore, if the X date's on Thursday and you buy them on Thursday, you did not own them before the Thursday date of the X date, and therefore you do not get the distribution that would be paid out on Friday. Now those shares would be eligible for the next distribution in 4 weeks if you still own those shares. But let's just take a look at the chart and let's just see if we can figure out which has a better possibility of being a good buy-in point, the X date or the day before the X date. So this D right here, that is the X date. That is when you have to own those shares by. So this date here is that Thursday. That is X date. And the last one that we had was $1.33. And as you can see here, the day before, and we'll zoom on in here so that we can really see those candles a little bit clearer. And as you can see, on X date, it was down. It ended up closing at $18.27. Okay? Now, what happened the day before the X date? Right here. It closed at $21.01. So it closed up here, right? And that was Wednesday, the day before the X date. And if you would have purchased them at this point, then you would be eligible for that distribution because it is the day before the X date. Anytime before the X date, you are eligible for that distribution. So at $21.01 and you get paid out $1.33, let's just see what that would actually calculate out to as your break even. So if we take that 21.01 and we subtract off that $1.33, that's 1968. So at 1968 is basically what you can say that you have those shares at, because you will earn that $1.33 because you purchased them the day before the X date. So ultimately you can say the cost or the adjusted average would be at 1968. But what was the close for the X date? Well, the close was 1827. So at 1827, so we'll punch in 1827 here, and that's a difference of $1.41. So if you would have purchased the day before the X date, just so that you can get that distribution of $1.33. You will get that $1.33, but you will also have lost $1.41 just in that price drop. Now, you could say, but look at all the candles afterwards, right? I would have made it back with no problem. Well, that's the thing about looking back at history. You can always see where you've been. You just don't know where you're going. So a lot of times, in my mind, what I do is I try to pick the one that at least I know for sure, and that being that distribution will come out of the price before the X date. Okay, so at that price of 21.01, that $1.33 came out of it and then some, right? Because it looks like it opened at 18.90. So there had to have been some extra movement pre-market or overnight that caused it to drop down a little bit more, and then they took that $1.33 distribution out of the price, which then opened it up right there at that 18.90 before it ended up dropping and closing at 18.27. So I would much rather buy it on the X day. And since my goal is to get my capital paid back, my buy price is very important to me. I want to make sure that I'm getting and purchasing my shares as low as possible so that my distributions I earn has the bigger effect of my overall adjusted cost basis, if that makes sense. Now, like I said, though, you can look at that and you can say, well, yes, I got paid the distribution here, I bought them here, and look at the price now. So I came out smelling like a rose, right? Well, you did this time, right? But that's not going to be the case every single time, right? You never know because nobody can tell the future. And if we go back here, just a couple back, you can see in this case, if you bought them the day before the X date, you would have paid $26.86, got paid out $2. So that's basically $24.86, right? But on the X day, it opened at $24.75 and then closed at $24.72. So since that one didn't move a whole lot, that one there would almost be a wash, right? Because it's pretty close to about what your cost would be because you traded your distribution for the price of the stock, right? Because the price, you paid a higher price to get that distribution, which then if you're using a spreadsheet to calculate and keep track of your adjusted cost average, then you would notice that that amount would come out and therefore your cost basis would drop. But you just never know what it will give you, right? Because you can look here, this one paid out $1.37 and we closed at $20.22, and you take out that $1.37 and you got about what, 18, we'll just say $18.90. And what did it open at? Right at that $18.90, right? So again, not much movement, and then it started moving up. So as you can see, each time it seems to be somewhat of a wash, but since you have the unknown of what's happening after hours or pre-market, for me, I would prefer to buy it on the X day itself. But that's just me. And that's if I was just trying to pick between the two. Because as you know, I have other indicators that I am usually looking at, right? I'm usually looking at my Bollinger Band. I'm looking at my RSI too, and to see if it is below that midpoint of the Bollinger Band, as that could possibly give me a better entry point versus just using that X date. But there is no really right way or wrong way to do it. It's just whatever you want to do, right? You've got to do your own research, make a plan, and if this is something that you want to get into, then you just try to find the best buy point you can so that you can get your shares at a lower cost. Because ultimately, the cheaper the price, the better off and the quicker you can recover your capital. Because in the end, for me, that's the goal, is to bring that capital down. My risk, bring it down. Because if I can get that down to zero, my capital all returned back in distributions, then every distribution after that is free and clear. And every 4 weeks, I can just smile and watch the money roll in. But that's only the case if you own your shares free and clear, meaning that you've earned enough distribution to pay yourself back your capital. But until then, you do have money at risk, and you need to make sure you're keeping track of that. So I think I'm going to wrap it up right there. If you don't mind hitting that subscribe button, it'd be much appreciated, and smash that like button. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, legend out.